Okay, folks, welcome to Swing Trading Today. This is Bob Desmond, and it is New Year's Eve, December the 31st, 4:55 in the a.m. Let's talk about what we're going to be going over today. And the first up is we'll go over the pre-market activity. I'm not going to do member stock chart requests, but I will do a second opinion submitted by William in the Traders Forum, and he brought up about an hour ago. He gets less sleep than I do. He posted that natural gas had gapped down about 6%. And it remains down. And he was talking about a trade. We'll go over that trade, I think, and why I think it's going to head next. So let's come back to natural gas. We'll begin with the major averages. All right, so we'll kick things off with the S&P 500. We are up strong this morning, a little more than 0.75 of a percentage point. You could see that we had a high on Friday of 2,523 on the S&P, which coincides with resistance last seen back on the 20th. So this is the line in the sand that we are looking at for a strong continuation move higher on the S&P 500. Now, we are long this market. We have been long the market since back here. We've been buying the emerging markets, the small caps, an investment bank, and an extreme oversold stock, which I mentioned on Best Stock Charts, and I'll link to it at the end of this video. So what we may be doing today is looking to book some profits into this morning move higher. I would expect a light volume up day. It is a full day of trading. The NASDAQ up strong, very close to taking out last week's highs. So again, we want to take our crayon out. And for those who are not familiar with technical analysis, what this line does is it represents where we are confident that there are sellers above and where we will meet resistance. So I have little doubt that we will challenge this resistance level. The question is, do we get rejected? Now, given market volatility of late, I'm not willing to risk our profits right now on a hope that we're going to break out when I should be fearing that we roll over and resume the path of least resistance, which is to the downside. Because as I mentioned to members yesterday on the week ahead commentary, this is a broken market on quarterly charts, monthly charts. It's a broken market. That doesn't mean we can't have rip your face off counter trend rallies like we saw last week. Now the NASDAQ this morning is up about a percentage point, just shy. Nice breakout on RSI last week. We had a double bottom setup, a higher low. We broke out above resistance, and we have continued to put in higher lows, and we are retesting support on RSI as we speak on a 4-hour basis right here. The VIX this morning is, as you might expect, down. What we're looking for here is a break of support or defense of support. We're not that smart to divine whether or not we're going to break or hold. All we're going to do is sit and watch, wait, and decide what to do if, in fact, the VIX breaks support. Do we remain long? Do we add to long positions? Or if we break out, do we look to short the market? So the jury's out, and my guess is, if I had to guess, I think we're probably going to break here and head lower on the day. Where I would begin to worry about being along the market is if we broke out and above this secondary downtrend line. That's like a tripwire. It implies that we're probably going to rally up to this upper band of resistance. RSI is confirming price action, so we have no positive divergences. So the VIX looking weak this morning. Let's take a look at the US dollar. Now the dollar is in trouble. in that, I believe I mentioned this last week, in that we have had several rallies up and through this upper band of resistance here, which have failed. We rallied, rolled over, and failed. Rallied, broke out, rolled over, and failed. And now we are putting in lower highs and lower lows. What I'm looking for here is a break of support. I think we're going to get it. Now, why is the dollar weak? You may be saying it's the government shutdown because that's what the financial news media is telling me it is. No, it's not the government shutdown. The government shutdown, if anything, is limiting the spending of the federal government, which is all debt-based, and that'll help the U.S. dollar. What is hurting the U.S. dollar as it stands right now is the possible resolution to the trade war, because the dollar has rallied on negative news out of the trade war. Go back in your timeline of history since the trade wars began back in the summer, and every time we have a bit of positive news, possible resolution to the trade war, the dollar sells off. When the dollar rallies, it's because we have more doom and gloom on the trade war. Also, over the weekend, we saw the euro firm up a bit. And what we may be looking at here, while we're down very slightly this morning, we were higher earlier, is a continuation breakout. Now, let's talk about this chart for a moment, because we're going to need to pull back and take a look at it from a higher level view. So, you could see that we're building the right side of a cup or a base. It may not be a cup with handle formation ultimately, but a base, the right side of a base, drilling back down again. We have been rallying, putting in higher lows, and now on this breakout here on the 18th, we're now putting in higher highs. We pulled back. We have a W formation forming. In fact, it was an undercut double bottom setup. And we have rallied. We've broken out. So this is digesting these gains right now. And I think that we are going to break out here. Why? It's because you had the Italian government come to an agreement with the EU on their budget. And don't get me wrong, I am not bullish on Europe. I think the political and social unrest there is going to be a big headline news story, at least for those outlets that are willing to report on it, because you don't see it on the mainstream media here. But this yellow vest movement is for real. The nationalists versus globalists is setting up for revolution in France, Belgium. So we really need to pay attention to with what is going on over in Europe. It's for real, and it's a major problem. The EU sees a threat to power, and they are doing everything to try to clamp down on free speech and on the right to protest. So keep an eye on it. Big, big news. So now that we've established, at least our opinion anyway, in that the euro should continue higher and the dollar may drop, let's take a look at precious metals. Beginning with gold, we have a new weekly high on gold, very slightly, but a new weekly high nonetheless. RSI continues to press higher here, looking good. One problem, though, is that we are not putting in higher highs on RSI. That is a problem. So that's a concern. But I think that this coming year is going to be the year for a weaker U.S. dollar, at least initially. Stronger commodity prices, at least in precious metals, perhaps not in energy. And I will be going over the 2019, the year ahead commentary. So if you're not subscribed to my channel, please subscribe to my channel. Click that bell or enter your email address on my website, and we'll get that out to you. Let's take a look at silver. Silver, another weekly high. Very strong price action here. Now, we are both long of silver. We are long of the gold mining names. And we're going to stay long, especially if the dollar breaks support. Taking a look at oil. Light sweet crude. I was relatively bearish on oil prices yesterday on the week ahead commentary, and I mentioned last night to members in the forum that on a 4-hour chart, oil was looking pretty good. So we are up this morning. So we had a continuation follow through from last night into this morning. We have higher lows getting put in. This is a 4-hour chart though, but as a short-term trade, it's looking pretty interesting. So here's our pennant formation. We attempted a breakout and we were rejected. It looks as though we're going to make another run at it. If we break out, we'll head up to, I think we could head up to 49.67 the barrel on light sweet crude. Now, if we break down below this lower band of support, I would avoid the trade like the plague. Our indicator, RSI, looking very good, confirming price action. Let's go to natural gas. I mentioned earlier that fellow member William had pointed out that we had a gap down in nat gas. So the question is, would we buy it here? And I believe he cited the RSI. Let me go back to his post. So what William is thinking about here is a long trade on nat gas, and he's citing RSI. So let's go back to the chart. We'll go to the daily chart really quick just to peruse his thoughts. For whatever reason, his RSI is different than mine. His is a bit more oversold. So right now I'm reading RSI at 30.74 on a daily basis. But we do have a gap down of over now 6%. Let's clear this chart off. All right, that's better. So what we've done here is we have done a complete retrace of this breakout from October. And we in fact shorted natural gas up here. We scalped the trade. We did 28% on that trade in only a couple of days. And now we are retesting support. And at current, we are down below it. So it's critical for this support level to hold. And I believe this is the gap that William is referring to. You know, we have filled it. So we should be seeing a bounce right now, because if we close down below this lower band of support, in all probability, we're going to come down here to as low as $2.80. So I would really watch the daily chart to see whether or not we break support. I mean, you could even use the 4-hour chart to tighten it up a little bit. You can see that we've been consolidating here from yesterday into today, but we are flirting with a breakdown here because at current we're trading down below that lower band of support. But this 4-hour bar just opened up 23 minutes ago, so a lot could happen. We could rally back. I wish I could say I were in love with the trade. I can't. Weekly chart. I mean, were there a support level where I would want to buy it? It's certainly where we're at right now. So I think your downside risk is minimal as long as we use a stop on a closing basis down below this lower band of support at, let's say, $3.20 to give it a little bit of room. But if we close down below $3.20, I would really look to exit the trade, and I would use either a 4-hour chart, depending upon your time frame, or a daily chart. You can see that we're rallying back a little bit right now, which is good. So watch for the support level to hold. That's your line in the sand. It's shown as being the line in the sand on a weekly chart, a daily chart, and a 4-hour chart. I wouldn't ignore it. So William, good luck with the trade. And that's it for this morning, folks. I want to keep it short today. I just want to wish you a very happy new year. I look forward to working and engaging with you in 2019. Everybody have a profitable trading day, and I will talk to you soon. Be well.